our receipt. So recently I've been thinking about changing up my style, which has pretty much been the same for the past 10 years. Embarrassing enough to say. Regardless, the good thing is that it's not the result of a crisis or anything like that. It's just time to elevate and evolve. That said, anytime we talk about changing up our style and moving into a new look, that almost always means that part of it is getting new clothes. And with new clothes means that there's a whole bunch of old clothes that I've got to get rid of. So while I pack these things up, I figured I'd take this time to talk about giving and donations and all the things and what that means for you and your taxes. So let's get to work. So the first thing that we have to do is define what is the difference between a gift versus a donation. Now, we've all seen friends post online about their WeFunder or their GoFundMe, and while they're both asking for money, they're not actually donations for tax purposes. The IRS defines a charitable contribution as one that you give to an organization that they've actually determined is a charitable entity. And what does that mean? That means that they actually have exempt status with the IRS. So just giving for the sake of giving doesn't automatically give you a write-off, and I think a lot of times clients will get that misconstrued. The other thing is that any gifts given to individuals don't qualify as charitable donations or contributions either. They would technically be referred to as gifts, but we're not going to talk about that in this video. I think the piece that can get really confusing when we talk about giving gifts to individuals is the fact that when you donate to an organization, usually there's an individual that benefits. So let's, for example, take these little pants. These aren't mine. These are obviously my daughter's, but she can't fit them anymore. And so they're also going to go in the box with my stuff. And a new mom could come into the Goodwill and say, you know what, I'm looking for some items for my kids or for my baby, and pick up those pants and the other items that I put in the box for her child. And while she is an individual, the Goodwill that I donated to is not that individual. She just happens to benefit from the donations that I'm giving. Let's say the mom's name is Jackie and I give it directly to Jackie. Well, no, I'm not donating anymore. I'm just giving a gift to somebody that I met or that I know, and that they benefit. So we've already spoken about the difference between a gift and a donation. But before we move on, I just want to recap so we're clear. A gift is something that you give to a non-qualified organization or give to an individual. A donation is one that has been given to an organization that has been considered exempt or has been deemed a nonprofit by the IRS. So now that we've gotten that out of the way, how do you even take advantage of this? It's very simple. All you're going to do is use a form called the Schedule A, and when you're filing your taxes, and on that form you'll be able to say who you gave your donation to, and that's pretty much it. I do want to mention though that a lot of times people will give, and they give $500, $1,000, $2,000, and they think that, hey, I'm going to get a benefit from making this donation. But this is the thing about that. When you make a donation that is small, it doesn't actually impact your taxes. The reason is because the only way that you really see the tax benefit of donating is if you're able to do something called itemize, which basically means that you use a form called the Schedule A. When you use the Schedule A, you are saying that I have more deductions available to me to use and to offset the income or to write off against my income that I made last year than what the IRS assumes is kind of the standard amount of deductions for cost of living that they give to everyone. So if you're single, that amount could be about $15,750. If you're married, that number is about $31,500. So there's several other deductions that you can take on the Schedule A. Things like real estate taxes, mortgage interest, medical expenses. But generally, all of those things that are listed on the Schedule A have to or should I mean, you can do it if you want to, but it doesn't really make sense under most circumstances. But all of those deductions should exceed the standard deduction for it to actually make a difference. So that's just something to keep in mind when you are trying to take advantage of this. The other thing that I want to mention is that there is a limit on the amount that you can take in terms of charitable contributions, and that is 60% of AGI. AGI stands for adjusted gross income, and all that simply means is that it is your income before any standard or itemized deductions, which we just spoke about when we were talking about the Schedule A. Now, let's say you have a very high AGI because you're a doctor or a lawyer or an entrepreneur, and you've kind of used all the loopholes that have been made available to you with your tax strategist. Well, charitable giving is a major key that will help you further reduce how much you can pay in taxes for the year. And the nice thing is that you can find your own organizations, or you can do different strategies like charitable gift financing that will allow you to essentially finance the gift, but only putting a certain percent down, usually about 10%, but being able to claim the entire gift in the year of donation. So let me give an example of what that looks like. So let's just say you made $1 million in income in a year, and that was after you've taken every possible deduction that you can find. Well, after you have taken all the deductions, you could, in theory, give away $600,000 in donations and charitable giving to qualified organizations. And if you do that, your taxable income goes from 1 million to 400,000, which is a pretty significant reduction in your tax bill just because of your giving. Now, when we layer on the idea of donating and you finance it and you only gave $60,000 but are able to take the deduction for $600,000 in the year, that's a huge win. I should say, you know, a lot of times we talk about donations in terms of money. You don't always have to donate money. You can donate art, you can donate cars, you can donate stocks, you can donate land. There are particular stipulations about how that's possible, but just know that it is. I'm gonna finish packing up my things here, but if you're looking for a way to save big and do something good at the same time, I encourage you to consider donating, because like the good book says, it's better to give than to receive. If you found this video helpful, this one might be enjoyable too.